Welcome to this new video. In this video I'm gonna explain to you how I use time statistics to my advantage within my trading. Time and distance statistics are a core pillar of my trading strategy, and I often share charts where you can see the P1 and P2, stuff like that, but not everyone understands how it exactly works, so I often get questions about it. Therefore I decided to make some videos where I will explain how I use it. So this is the first video where I'm gonna explain the time statistics. And then in the next videos we will go over the other parts of the statistics. But let's first start with the core pillar, which is time statistics. If you don't know me yet, I'm Memon. I'm the co-owner of Met Trading, where we help people become profitable faster by sharing a systematic range trading strategy and helping people with educational resources and just overall support. Let's get into the data. So first of all, what are time statistics? Time statistics is another way of looking at charts. A lot of people always look at a chart only at price action, but they never ask themselves when does something happen. So people always look for prices to where does something happen. So they mark out levels on the chart where they want to get involved. For example, this demand zone I've marked out. However, almost nobody pays attention to when it happens, although this is a very important part in trading. So in this video, I'm going to explain to you the part about statistics. I use it for several reasons. It's mostly for me to increase my confidence in the trade idea, because with the statistics I can see the probability based on years of data, how likely it is that a certain high, for example this high, or a certain low will hold. So it gives extra confidence in my trading decisions, which in turn removes emotions, which is by far the hardest part about trading. Trading is an emotional job, so you need to try to erase emotions as much as possible, and the more trust you have, the better it is. Besides that, it also shows me when to trade, when not to trade, and that also gives you a lot of rest in your mind, because you can't watch the chart 24/7. You just don't have the concentration to do that all day. So knowing when to trade and when not to trade is also something that removes a lot of emotions and can help you plan in your day when you want to go to sports, when you want to sit behind the screens, stuff like that. So in this video I will explain to you exactly how I use the time statistics, and then you hopefully better understand how I use it, and then in the future when I share charts about it, you will understand it. That's also because in the Discord server, which can be found in the link in the description, I share everyday statistics based on time and distance statistics. So then it's good to know what I'm exactly talking about. So let's start with explaining what it is. So we have time statistics, which means that we look at where is the daily high and where is the daily low. So for today, we can see that we have the daily open, then P1 is at hour 1 and the P2 is at hour 8. Let me first explain to you what P1 and P2 is, because I often mention that in my posts on X or in the Discord server, but it's important to know what it exactly means. So let's get into it. P1 basically means this line, this is the daily open and this is the daily close. So a full trading day or a full trading week happens within these two levels. Let me first start with the weekly statistics, because we have weekly statistics and we have daily statistics and low time frame statistics. But for this video, I will only talk about the weekly and daily statistics, because they're the most powerful in my opinion. So let's take a look at the weekly statistics. Here we can, for example, see Monday, Tuesday, Wednesday, Thursday, Friday, so the whole trading week. Also the weekend week, it's a bit less important, but here we can see some percentages. Later I will go into that. First I will explain to you what P1 is and what P2 is. As I said, this is the daily open. So let's say price moves up on the daily open, then we come down, we have some price action like this. P1 basically means the pivot one, so the first pivot. What is a pivot? A pivot is either a high or a low for that certain time. So if we move up right here, then at this point, this is our P1. That's the first pivot that happened. Afterwards, we see this low. In this moment, because this happened first, we call this P1. This came after that. So this is P2. Drawing is not too clear, but you get where I come from. Then we just watch, let's say this is Monday, this is Sunday. Then we have to see what is P1 and what is P2. So at this moment, this is P1, this is P2. But if we see here, price moves up and takes out this low, then our P2 moves to a new low. Then this becomes our P2. Why is that? Because we always just look from the weekly open to the weekly close. What is the highest and the lowest point? And what comes first? That is your P1, and the second one is your P2. So what can also, if we look at the end of the week, right now, this is our high, this is our P1, and this is our P2, that's the low. And the rest of the week, we stay within these levels. So this is our weekly P1 and P2. Because it might not be too clear yet, I will give another example. Let's say price opens here. We first go lower, then we come up. Then here we make a new high. Then at this point, this is our P1, because this happened first. We first went down, then we go up. And then in this case, this is our P2, because this happens first, this happens after. P1, P2. Price moves within. As long as we stay within this range, this is our P1, this is our P2. Then what can also happen is that we move lower from here. In this case, we take out our P1. And this is the important thing to remember. Here we take out P1. So then we have to ask ourselves, what is the first pivot on the week? Do we first make a high or a low? Well, in this case, we first make that high, and then afterwards we make that weekly low. So in this case, we have a flip. So then this becomes P1 and this becomes P2. And it's important to know what that P1 and P2 is. Let's erase that, because here we can see for the week. On the weekly time frame, it matters a lot if you form your high or your low in which day that is. For example, we can, with these statistics, see that on Monday is a very pivotal day. In 65% of the days, the high or the low of the week gets formed on the Monday. So if we start the week, weekly open, and we move up strongly right there and then go down, then if that high is formed on a Monday and we form that low, for example, on a Tuesday, then that Monday's high has a 65% to hold already. So keep in mind, everything that happens on a Monday is very important. So it oftentimes either forms the high or the low of the whole week. Now we can see that on Tuesday is less likely, Wednesday is one of the least likely days. Then Friday becomes a day where we often form the P2. So for the weekly, it's important to see when does something happen. However, we can also do the same for the daily. If we go to the daily, and then we can just use the statistics I have right here. This is our current day, and here we can see that the daily open was here. After the daily open, we made a move up, then we moved down. So at this point in time, our daily high came first, that's here. So this is P1, and afterwards we created a low right here, which is our P2. As long as we stay below these, this will be our P1, P2. Let's say price makes a new low, then the P2 will move from this low to this low. And now it becomes interesting, because with these time statistics, we can see how likely either the high or the low is to hold. And that can give us good insights for what to expect for the rest of the day. So let's look at the data. Right now it's time adjusted, so that's based on the current high and low, but let me change it to the normal mode. Right here we can see the percentages for how likely it is to form either P1 or P2 at a certain time frame. This is all UTC plus 0, so UTC dot 0 as I said. And then you can see how likely it is to put in a P1 or a P2 at each trading hour. Well, what's interesting here is that you see that hour 0 has a 30% chance to create a P1, then hour 1 has an 11, almost 12% chance to create a P1, and then it drastically goes lower. And then the further we go in the day, of course, the more likely it will become that a P2 will be formed, and the less likely that a P1 happens. Now we can see that from hour 3 till around hour 13, it is a low probability that price forms either a local high, a daily high, or a daily low. This is the London session, and that's why I also often mention that the London session is often pretty choppy and doesn't give you good daily highs or lows. So not too probable daily highs or lows. And then we can see that from hour 14 onwards, it becomes more likely again to form the P2. So only that data already shows you when it's better to trade and when not. So let's look at the current data. What we can see is that we formed our daily high at hour 1. Well, here in the data we can already see hour 1 is a strong hour. I'm now going to put the dashboard on the time adjusted data. By the way, one thing I have to say is I'm making use of the Minoma Analytics dashboard. This is a dashboard where I use all my statistics from. It is from time statistics, which I'm explaining now, to distance statistics, to pivot indicators, to fair value gap data. It is incredible what kind of data is all built in this dashboard. I recommend to check it out. The builder of this is Sergio Tesla. His X profile is at Sergio Tesla, so check out his page for sure, because he drops alpha on a daily basis and he is an incredible builder. So check that out. Then go back to the chart. Right here we can see that we have P1 at hour 1. So here we can already see that we have a 30% chance that this high will remain the high of the day. So that's already pretty interesting, because that shows us that this has a high likelihood to hold. Then we can look, what is our daily P2? So our daily low currently is at hour 8. Let's look at the data. Here we can see that it's an 8.8% chance that it becomes P1. However, how can this become a P1? That can only happen if we move up from here and take out our current P1, because then this will become P1 and this will become P2. But since this is a pretty, also from a technical point of view, not a bad high, and we put it in during hour 0, I would say that this high, current daily high, is pretty likely to hold. Statistics also show us that. Then, if that daily high holds, we can see how likely is it that hour 8 puts in the P2. As I already said, London session doesn't often provide good highs or lows, and this data represents it. Here we can see that we have a 1.6% chance, based on years of data, that this low will remain the low of the day. So that's a very, very low probability that this low will hold. What does this tell me? To me, it tells that this low is not likely to hold, purely because it is put in during the London session, and I know London session doesn't often provide good lows, while the high of the day is a very strong pivot put in during the first trading hour, well, the second hour 1 of the trading day. Then what is always important is to know that your chart always leads, but it's good to have confidence with the statistics added to it. If we just look at the chart, we just swept important liquidity, we pushed up where we left behind an imbalance right here. We have the O to E level right here, and we have a demand zone, 45-minute demand zone. So I already marked out this level yesterday that I wanted to see and move into this box, and then I want to look for some signs of strength to look for a long to ride it higher. Well, we have reached that area. However, now I get the rest, because normally I would feel FOMO. I need to get in. What if this is the low? Well, with the statistics, I'm just calm. I know that we have put in the daily P2 at hour 8. We have a 1.6% chance that this low will hold. So what my plan is, and I can always be wrong, but I now know that the statistics are backing up this idea as well, is that I'm waiting for some time and distance. That's also something I often mention. Then I want to see one more move lower during, like this is for example during 4, so that will be within these hours. And if we look at the statistics from hour 14 onwards, it becomes more and more likely to put in the daily low. So now I have the rest, because I know it is very likely that we need some more time, and then if we make a low later today, probably an hour or after, or a few hours, or during New York, if we then put in that low, then I'm way more confident that that will be the daily low, because then statistics also show that to us. So that is my plan for today as well. I'm just gonna stay calm, because I know probability that that low holds is very likely, less likely. So I'm gonna wait for one more sweep of the current daily low into the New York session. If we then get a market structure break, then I'm willing to take the long. What this also tells me, which is important to know, is that you can use the statistic to determine where you're gonna put your stop loss. If, for example, normally I would not use statistic, you could say maybe this is the low. So then you could say I use this as my invalidation, then I want to long. However, because statistics shows us that it is very, very unlikely to put in a daily low or high in the London session. Currently we have the high at Asia session, so this high is likely to hold, while we have put in the low in the London session. At hour 8, we just saw that we have a less than 2% chance that this low will hold. So using this as your invalidation is very, very unlikely to happen, and you are playing against the odds. So let's say I want to long here, then I know I need to use a wider stop. So then I maybe set it below this demand zone, and then I look for a long. However, since we know that the daily high is likely to hold, is it worth to take a setup like this, which will be a 1.3R around, because I'm not expecting a new high, because this high is pretty strong. Then I know, no, that's not worth it. So I'm just gonna wait and then see if we can get that move lower during New York session into the OTE, which we have here, which are our perfect fit levels. If we then make a new low, then break structure like this, then I know if that is on a favorable time, for example, hour 16 or 17, or later in the day where the likelihood increases even more, then we can long it and then use that low as our invalidation, because then it's much more likely that that will be the daily low. And then you can long, and then your RR becomes much more favorable, while you not even aim for a new daily high. You can still get like a 5R trade with the same trading idea, which is overall very great. So all in all, these data, so seeing where the daily low and the daily high happens, but also the weekly high or the weekly low, can give you much insights in what to expect. One thing I want to give with you is that the hour 1 and hour 0 are by far the strongest trading hours. So to put in a high or low. So always keep an eye on that. What also, for example, I'm often watching for is what if price does nothing here, but it creates a low tomorrow at hour 0 or 1 into that level of interest and then pushes up. Then for tomorrow, which is Friday, our P1 will be this, which is then put in during hour 0 or 1. And then if price moves up from there, then you can be very confident that that is your low for the day, and then you can aim for higher prices. So oftentimes you want to look for the Asia session, which is hour 0 or hour 1. They are very important. Then during London, you can expect price to just chop around. And then later in the day, during New York, you can expect a new high or low to follow. Just keep in mind that aiming for a low or high to hold during London is often not the best. So what I often do is to make trading plans early in the day, then go do some self-study, go to the gym, stuff like that, and then prepare some more before New York open. And then with New York, you're gonna trade and look at what's some statistics and stuff like that to make your trading plans even more reliable. What I'm looking at for today is what I said, looking for a new low later in the day, then put my stop loss below that low or here, and then aim for a bounce. Maybe we can go for new weekly highs as well, but I'm not expecting a new high today because we have P1 at hour 0 at hour 1, so that could take some more time. But maybe tomorrow it's Friday. Friday is often the day we make new weekly highs or lows, so then maybe during Friday we can aim for something like this. This is for now kind of my trading plan. We will see how it plays out. I have no idea at this moment. We will see. But in this video I want to tell you what P1, P2 is, how I use it with my day trading, how I use it for swing trading, also to see which day it is likely to put in a high or low for the week. And I hope now it became more clear when I share the statistics for certain coins, like here. I share that each day in a serve, and once we have good pivots, we know which direction we have to trade in, when we have to trade, when not to trade. So I hope it's clear. If you have any questions, leave them behind in the comments, and then in the next video of this series I will go over the distance statistics, which is another very interesting topic. Then afterwards we also go into the pivot zones, and overall it's just statistics are amazing to add confidence to your trading. So I hope you also like it, and then I see you in the next video.